I didn't talk any smack about that stock. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. At the end of the day, here the position disclosure is basically the same. I bought a very small position in JD that I'm swinging. It's really just a small reentry feeler, really small. That's the only update. I did in and out on a few names today, though. I shorted Palantir, I got out of it. I was long Meta, I got out of it. I was long T-Triple-Q, I got out of it. I was long Roblox, got out of it. I was actually profitable on every one of those today. So that's good, considering it was a boring session kind of overall. And speaking of it being a boring session, let's have a look at it. SPY's finished up 0.25%. That's good for our vol control buyers. Q's here finished up 0.8%, so some relative strength from the NASDAQ. It seemed like there was particularly some relative strength in a lot of growthy areas of the market. And I don't know if that's just because the animal spirits woke up a little bit with how some of these IPOs, Newsmax and WTF are trading, but it seemed like growth traded well today. And the IWM, however, was relatively weak. So IWM was relatively weak. XLE still finished up 0.5%. I remember looking at this at one point earlier in the day and noting its weakness, but now I'm seeing it closed on highs, and that daily chart actually looks really good. What did financials do? Yeah, financials took a little bit of a rest day today. Um, Curious. Staples up small, utilities up small. Okay. Where's TLT? TLT up 0.5%, so rates down a little bit. Dollar's been in a tight range recently. This dollar ETF hasn't been as important of a player for the market. But anyway, we got a little bit of follow through to the upside, led by tech, off of yesterday's extension low trade. So if you're still long from this call out yesterday and you kept some as a swing, depends a little bit on what stock you're in. Not every stock is created equal today, but there's a good chance that you got some further follow through to the upside. And that is as the market works its way back up to the 80 MA on the daily. So SPY's basically ticked that 80 MA on the daily today. Then we rolled down at one point a little bit in the afternoon. That had me nervous that we might just get an upside tail into the 80 MA on the daily, which would have been bad. But then we had this nice little rally here in the last hour of the day that gave us a decent close. A decent close. Nothing too much to write about here. Basically, we have fully fulfilled the extreme amount of downside extension we had at yesterday's low. It remains a very volatile market, very headline driven market, and obviously we are expecting a very big headline after the close tomorrow on those tariffs. I kind of wish that was happening during the trading session, to be honest. It's annoying that it's happening after the close, and then we're just going to have to deal with trading after hours or trading the gap the next morning. But whatever is what it is. Can't control those things. So again, we satisfied that downside extension, and now I think we're just kind of in wait and see mode. So depending on where we open tomorrow, if we open up flat or up small tomorrow, the best game plan will be similar to today's game plan, which will be to be selective, take a less is more approach, take a few strategic day trades to make a few dollars, but probably not do anything big picture. And that was really today's game plan also. And just looking at my P&L and seeing I made a couple dollars in Palantir, Meta, T-Triple-Q, and Roblox, I'm happy with that. None of them are huge numbers. They're not going to change my month or change my year, but when you get those little winners, when there's not a lot else going on, they can add up over time. But when we're in a more difficult spot, when we're right in front of a big event like this, sometimes less is more is the right way to do it. Or you continue to get, and this is really my preference, you continue to get paid from the hard work that you did on previous sessions where there was a lot more opportunity. Yesterday morning, there was a big buying opportunity on that day 4 gap down extension, and today there was much less opportunity, there was much less to do. But like I said in the very beginning, depending a little bit on what stock you have, there's a decent chance that you actually got some further follow through, some further reward for the risk that you took yesterday. And that's a lot of what I love about doing a good job at the right times in trading. When you do a good job on the right times in trading, especially if you do swing trading, you can continue to get paid for days or sometimes even weeks after the initial risk was put on and the initial work was done, and you just kind of continue to reap the dividends of that initial hard work. And we've seen that on a couple occasions, right? We saw that by having some swing shorts at highs. We saw that by having some swing longs here for this bounce back trade. And once again, if you kept some stock from yesterday, you got paid a little bit extra today. So that's pretty much it. SPYs touched the ADMA. Qs didn't quite get there. They actually still have like $4 of extension or so. That'll be even less tomorrow morning because that ADMA will keep working its way lower. And the IWM also not quite to the ADMA, but battling 200 bucks and trying to get back up. IWM was a little bit relatively weak today. So not really too much to talk about. I mean, we could take a look at some names. I don't know. Some of the stuff was just a little bit tricky. Like I was trying to look at the quantum names today, particularly this Ion Q, and it was tricky because they wrecked this thing down here off the open. It was an okay little buy on this price correction off the first test of the ADMA. I like that buy a lot of those big gaps, but this selling was too fast and furious almost. Then it actually basically filled the gap before making new highs in the day before rolling all the way back down. So that ended up being a tricky trade. I was able to make a few bucks kind of day trading this around a little bit of a swing that I have that I'm trying to be conservative with. But it was certainly not easy. But those types of growthy names tended to trade a little bit better today, like this TTD, a little bit better today. I don't know, like a Unity was a little bit better today, a Path was a little bit better today, a SoFi was a little bit better today. So again, just some of these growthy names, for whatever reason, seemed like they performed a bit better today. And I guess that's it. I really don't have too much to talk about at all because intraday was very slow, wide-ranging but slow. Apple gave us an inside day, so we can watch for an inside and up tomorrow to see if it gets through 225. Might be a tough trade in front of tariffs. Google gave a little bit of a further bounce back. We talked about that in the morning meeting today. You could be long versus yesterday's low if you get a pullback and you get a decent risk reward off of it. Amazon was similar. Not quite sure if today's low was enough, if it was worth it to pay up versus yesterday's low. But if you got some, you got a little bit of follow through on it. NVIDIA inside day, so see if we can get an inside and up on that NVIDIA. AMD very tight today. Also eyeballing it, it looks like an inside day. Tesla managed to be pretty strong. Decent upside tail there, which isn't great looking, but Tesla managed to be pretty strong despite just more not great news coming out on the stock. So that was notable in the morning meeting, and because of that, I avoided Tesla entirely today. And I guess that's it. I'm kind of reaching for things to talk about. I don't really have much to talk about. I mean, we have talked about tariffs to death. If anybody's got any questions about it, I could talk about it again, but we have spent so much time talking about it. I think everyone has an understanding of what tariffs mean and that we have a really big event tomorrow that has a decent amount of uncertainty to it. I guess I'll just repeat what I said earlier in the morning meeting, which is that a lot of the times when you have a big event like what we have tomorrow, the market fully prices in the event before the event even occurs. So that's where you get the expression buy the rumor, sell the news. So, market goes up a lot into a big event that everyone expects. They tend to overshoot it. Then the news actually comes out. That news meets expectations, but they had overshot to the upside into that good news, and then you get a sell-off. Or potentially, in this case, for tomorrow, it's the opposite. We have sold down into the tariff announcement. Maybe when it hits, it's a sell the rumor, buy the news event, and we get bought back up. But the key thing about that concept of buy the rumor, sell the news is that you need to really fully understand exactly what's going to happen going into the event. Everyone needs to know exactly what's going to happen going into the event. Like a perfect example of that, it's one of my favorite examples to cite for a variety of reasons. It was very textbook, was when Russia invaded Ukraine. We were like day 6 to the downside, massively extended, gap down huge that day, and then that was a short-term bottom for the market. We got bought up huge from that opening gap down low that day. Perfect example of sell the rumor. Everyone knew, they had announced it. Everyone knew exactly what day Russia was going to invade Ukraine, and like a week in front of it, we just sold off every day in anticipation. When it finally happened, the market immediately got bought back up, and it was a short-term low. But again, in that situation, you need everyone to know exactly what's going to happen into the event to get it priced in, to get the move potentially in the other direction. And I just think when it comes to this announcement tomorrow, it doesn't seem like very many people fully know what to expect out of this. I know a lot of the research, sell-side research notes that I was reading as early as this morning was saying that even within the White House itself, they're still a little bit unsure, as of last night, as of this morning, exactly how they're going to be implementing these tariffs, whether it's done country by country or if it's just one number across the board for everybody, or exactly what that looks like. So because there's so much uncertainty and no one knows exactly what this is going to look like, I don't think it's necessarily a sell the rumor, buy the news event, but it could be. It could be. It depends on how bad the tariff announcement is versus what the market has priced in at this point. And it's just a little bit tricky to know that exactly. Maybe it comes out and it's maybe not as bad as people are expecting, and the market rips higher on that. Maybe it comes down and it's worse than everyone's expecting, and we move lower on that. One of the JP Morgan notes I read, which I thought was great, I read it this morning. It basically kind of said, like, and this goes along with, I think, Charlie McElligott at Nomura saying that tomorrow is the end of the beginning. The JP Morgan note basically said that, all right, tomorrow is the event, but doesn't necessarily give us the clarity that we're looking for, because first we're going to have the event tomorrow, then we're going to get the retaliation from Europe, from Mexico, from Canada, from China / Japan / South Korea, because apparently they've all teamed up in the face of the situation that they're going through with the United States. So then they're going to give their retaliation, and then when they retaliate, you know what we're going to do? We're going to escalate. Oh, you're going to put additional tariffs on us? Then we're going to make it 50% instead of 25%. And then from the escalation, you get the negotiation and potentially the reconciliation. And according to that JP Morgan note, Scott Bessent, the Treasury Secretary, was saying that those real resolutions may not happen until June. Well, June is a while away, so it's hard to say. It feels like, though we don't know exactly what's going to be said tomorrow, it kind of feels like the risk is to the downside a little bit, because we still have to go through the retaliation and the escalation phases. But I could also see us giving a little bit of a vol crush relief rally immediately after. So I'm very unsure. I'm more unsure going into this event than I feel like I typically am into this type of stuff. But if I had to say bagel to head, I would say that initially we trade higher on it, and then eventually, initially we trade higher, maybe get a little bit of a vol crush because we're past the event, the market moves up a little bit, but then as the retaliation and escalation headlines hit over the course of the next couple weeks or whatever thereafter, then we actually sell that back down to these lows that we've been testing now a couple times in March, including just yesterday. That's my bagel to head thought process on it, but like I'm saying, I'm very uncertain about exactly what this is going to look like. And then I think that the bigger read-through, Rock was kind of saying this in the VTF earlier, I think that the bigger read-through, and in some ways what is going to become even more important, obviously the tariffs are really taking home the headlines, but the real important thing is going to be the eventual read-through on the economic numbers employment, growth, inflation, those numbers. And we're a ways away from seeing that. I think even for the month of March, when we start to see like the unemployment numbers and stuff come out for the month of March, that's not gonna. It's still not gonna fully include like the government layoff numbers in that. We're gonna really, I think, begin to see those numbers hit a little bit later here in the second quarter, and at the same time, we'll also be able to see some of the further impacts of tariffs and austerity measures and exporting cheap labor out of the United States. So we'll see how it plays out. But just kind of getting my thoughts out there. Not really anything else to say for today's afternoon meeting. So I am happy to turn it over to you guys for questions. I thought I saw something from Pete. Now I'm looking for it in the VTF. I thought that was the first thing I saw, like right at 4. Oh, there it is, at 4:12. Thoughts on CRWV and Newsmax. So thoughts on the recent IPOs. Yeah, so I'm not surprised to see this from this CoreWeave. I was hoping to see this on the IPO day. That's when I was more positioned for it. $40 is the IPO price. So the stock getting above $40 is huge. And I think that when it comes to this CoreWeave in terms of its initial moves, you need to be thinking about who are the participants that actually have stock in this reduced IPO, right? Because if you recall, my initial thought process in CoreWeave, when there was a lot of hype around it, was that I wanted to short it. We were looking at, I think, an IPO range of like 45 to 48, and there was a lot of hype around it. And if you've traded a lot of IPOs, oftentimes on the secondary market, it opens up at a premium to the IPO price. So if the IPO price is 45, it's not unusual to see a stock open up for actual trading anywhere between 50 and 70. So I was kind of, my original thought process was like, all right, let's get a $47, $48 IPO price on this CoreWeave. Let's have them open it up in the mid 60s, and I'm probably going to short that because I think that there are problems underneath the surface with the company. Now, the company itself, I've done a little bit of research on it. It actually has tremendous revenue growth, but they have debt problems. They probably have a need to raise additional capital at some point in the future for their expenses. Microsoft was their biggest customer, reduced a lot of the work that they were doing with the company fairly recently in front of the IPO. And I think that kind of getting out there was probably the reason why the IPO ended up actually going off so badly. But then they reduced the float, they reduced the IPO price to 40, and the sentiment seemed like it turned so bearish on it that I actually thought that the trade could go in the other direction because, and now this circles back to who probably has stock in this. So they reduced the float, but we know that there are some really big players that have a good amount of that stock, such as NVIDIA. I think that this, remember Brandt saying before the IPO came out, and this certainly seems silly to me, that the CEO of CoreWeave came out and said if it wasn't for NVIDIA taking their stake, we wouldn't even be able to get this IPO off the ground. But when I think about some of those big players like NVIDIA, and there are a few others, I don't think that they're selling on day 1 or day 2 or day 3. The people that are selling on day 1 or day 2 are more of like the professional IPO flippers, and there may be a couple people in this VTF who have participated in the syndicate calendar before. I've never actually done it myself, but I know enough people who do where I understand how it works. But, basically there are market participants that play the syndicate calendar where they keep large accounts with investment banks, with, say, Goldman Sachs. And then Goldman Sachs typically charges like really high commission costs to them. So it's a little bit like, you rub my back and I'll rub yours. we'll charge you these really high commission costs, but you got to keep a large account with us. You got to do some trading through us, but we're going to give you IPO allocations. And a lot of the times, what's going to happen is, like I was saying before, that $45 priced IPO is going to open up between 50 and 70. They can potentially dump it right away and make a free, 20, 30, 40% on, not necessarily free, but basically get gifted 20, 30, 40% for the pleasure of keeping that large account with the investment bank and paying exorbitantly high fees in this modern world of lower trading commissions or potentially free if you're with a PFOF broker. So yet sometimes those syndicate players get a little bit screwed because they'll be asked by that investment bank, like, hey, do me a favor, this IPO is not going to be very good, but just take some stock for us so we can get it off the ground, and then I'll make it up to you on the next really good IPO. So that happens sometimes also. So when it came to this CoreWeave, when they reduced the float, and you know that the NVIDIAs of the world are probably not going to sell, who is there to sell? It's a reduced amount of like syndicate calendar IPO flippers that actually have stock. But they do probably, they're not really in the game of necessarily, maybe some of them do, but they're not necessarily in the game of taking risk on those IPOs. They want to make that immediate 20, 30, 40% and then sell the stock. So with this CoreWeave, pricing at 40 and opening below 40, they're immediately slightly out of the money or break even as it traded through 40 on the IPO day. So that was creating, I think, the initial supply that was weighing the stock down in the very beginning. I was buying it on the IPO day with the thought process of, all right, I just need these IPO flippers to kind of get out of the way because the bigger players I don't think are going to sell, and there's a reduced float, so they might actually be able to get this thing above 40 and run it. And they did get it above 40, but they didn't run it. I was able to make a few dollars on it, but when I saw that it was about to close at 40, and I had to leave early on Friday, I actually remember I put a sell stop back below 40 when it got back above, and I got stopped out of it when I went through 40. And then yesterday it gapped down below it, and I was like, all right, well, I'm not touching this thing while it's below 40. Then today I got asked about this CoreWeave in the Benzinga interview thing that I did, and I basically said, just put an alert out at 40. If it's trading below 40, you probably don't want to touch it. But if it trades through 40, that could be very viable, and they could rip it above that. Here we are. Stock got through 40, went up to 53 today. It was a great trade if anybody took it. I decided not to just because I felt like I had too much on my plate. It got above 40. It gave a good-looking higher low. And I remember somebody was asking me about, during the day today, shorting it off this 1025 candle. And I advised against it. I know that there's a little higher volume here with an upside tail as the stock, made a new high there into, I think, some resistance from the IPO day. But I was like, if this thing's holding above 40, there's a good chance that not only is this high going to be breached, but that it's going to run. And then, lo and behold, you get a quick test of the 80 MA on the 5-minute, and next thing you know, the stock drifts up to 53. So now I think that you've got most of those IPO flippers out of the way. You've got a reduced float. You have the core shareholders, the NVIDIAs of the world, I don't think rushing to sell necessarily on day 3. So that creates like a lower kind of tradable float with less potential upside resistance that can enable the stock to run. So traded great up to 53. I don't love some of the aspects of the company. I already described those a little bit earlier. So I'm not, probably buying 53. I'm not really going to chase above 40. 40 was really the spot to buy. But given those kind of dynamics I just discussed, I'm not shorting this thing either. At least not here. Give me like, it's the same pattern that I look for in a lot of these things. Give me 3 crazy upside days in a row. We're at $88 on day 3. Maybe I'll consider shorting it at that point. And I'm particularly cautious against shorting extended moves in IPOs because a lot of the tradable float is locked up. You're still in a restricted period for insiders. So when a lot of that tradable float is locked up, I've just, over the years, I've seen really, really crazy things happen on the upside in IPOs. And really, the better trade is to try to take advantage of that. If you can find a good technical way, and that's what I was trying to do with this thing, specifically on the IPO day. I thought that there was a chance that if this thing got above 40 on that day, that it would actually do the move that it did today on Friday. So that's what I was really positioned for. I had a good amount of size with a very, very greedy game plan. I was game planned up to at least 50, I think, on that game plan that I had for the stock that I had. And whatever, it didn't run. I made a few dollars on it. I got out of the way, and then lo and behold, today is the day that it went. But you gotta be very careful. When I was on Benzinga today, the host, I think his name is Ryan, he brought up GoPro. I remember trading this GoPro IPO. Back in 2013, 2014, IPOs actually were a big part of my game. Maybe it'll come back. I feel like that same edge I had back then disappeared a long time ago, and IPOs have been, generally speaking, more difficult, though today they all seem to really be running. You want to make sure to note the lockup expiration. Let me see if I can zoom in here. I want it from the beginning. Yeah. All right. GoPro. I don't remember what the IPO price was. It looks like it opened up, I don't know, around 30. But it's the same deal. It was because the tradable float was very, very small initially, and the insiders couldn't sell. And GoPro went ballistic. Great initial, huge four-day up move, consolidated for like 2 months, and then broke out through resistance and just went on an absolute tear all the way up to $200. So, I don't know what the actual IPO price was, but opened up around 30. Immediately over the course of 4 days, traded to 50, based, and then went to 100. Insane. I'm like 90% sure in my head that the absolute high in GoPro was the lockup expiration of the restricted shares. That's how I remember it. And then that is the all-time high in GoPro. It never saw it again. Up at 100, worked its way all the way back down to support from the IPO. Next thing you know, it continued to just work its way down to $10, and then the stock is a 67 stock even right now as we're talking. It has never, ever been able to recover ever since then. So, when I'm looking at some of these IPOs right now, like a Newsmax or whatever, I described it perfectly in the morning meeting today. I said in the morning meeting today, someone asked me about Newsmax. I was like, I missed it yesterday, so I'm not trading it today. I missed the long yesterday. I'm not trading it today. I said in the morning meeting today, Newsmax could go to 5. It could go to 500. And any concept that you may have about the fundamentals of the company do not matter at all whatsoever at this time. It's similar to what I just described with GoPro. It's trading with a low. I haven't even bothered to do much research on it because I honestly don't care. To me, this is just a shot. It's also, like I said in the morning meeting, I said this is going to be an entertaining sideshow for today, not something that anybody should really be trading. And it certainly was an entertaining sideshow. Stock could still go to 500. Stock could go to 700. It doesn't matter what the fundamentals are. I'm sure eventually in the long run, we're going to see this thing trading certainly below 50, probably at $5 or $10. But in the short run, who the hell knows? That's just how some of these IPOs can be, especially if they've got a low float to begin with, or they just have a low tradable float because everything is locked up. So right now, this thing is currently insane, and it's still not something I have any interest in trading. And then the other problem is I probably would at a certain point maybe look to start shorting this small. I don't want to pay for the borrow. I don't want to pay $500+ per 100 shares to then put the risk on that the stock rips against me. It's just not worth it. Even if I do think it can go down a ton. It's just a very, very expensive borrow to put on a boatload of risk and something that could just continue to rip against me. It's a sideshow. It's not something to trade, and that's just how IPOs are sometimes. So I got for you on Newsmax, and then today we had WTF. We probably got to start paying attention to when IPOs are coming out again. I stopped paying attention a long time ago just because they were kind of duds and were really tricky to trade for a while. But they ripped this WTF higher as well today, and it also looks like I think it's trading higher. Trading higher after hours, trading at 27 here after hours. I didn't even know that there was another IPO today. There's halted multiple times. Whatever, just kind of went bonkers. But it's the same concept here. And then you're also asking me about SOXL. Yeah, semiconductor ETF was just a little bit relatively weak today. Gave an inside day, so you can see if it gives an inside and up. I don't love the relative weakness in the space right now. I wish it was trading at least with the market. And I'm actually surprised it didn't trade better because it seemed like a lot of these growthier AI names were trading a bit better today. I didn't look at AI itself, but I know that CTAI, whatever, is that what it's called? Was running at some point. And, it's NBIS, which I'm in, which is a little bit of an AI play, was relatively strong. So I was actually surprised that the semis weren't better. But whatever, inside day, see what happens with the inside and up, see what happens with the tariffs. How am I? I'm doing well, Michael. Thanks for asking. From Tate, do you think tariffs will be a recurring theme this earnings season, especially in terms of increased costs, supply chain disruptions, or shifts in production? Probably. It's a great question. Probably. I think the last earnings season there were a few companies that addressed it. Like maybe Walmart addressed it, and Walmart's been acting weak ever since. But a lot of the companies I remember seeing were like, these are our expectations, but we're not pricing in anything on tariffs right now because it's an uncertainty. And now that it's becoming more of a certainty, one of the problems from a corporate perspective, corporate management perspective for a lot of these public companies that have to deal with tariffs is that what the tariffs potentially look like seems like it's changing on a day-to-day basis. The tariffs are on, the tariffs are off. The tariffs are 25%, the tariffs are 10%. Like no one knows what they're going to be. That's annoying for us as traders, right? Because we're trying to figure out the macro implications to the economy and how we should be positioned in the market, and it's creating a lot more uncertainty and like coin toss type of situations for us as traders. But imagine that you are in the C-suite at Walmart or Target or one of these companies that is reliant very heavily on importing goods from China or from abroad. You don't even know how do you even develop a strategy? How do you even develop a strategy for how you're supposed to approach corporate strategy when the terms of your business are seemingly potentially changing every 3 days because the administration can't make up its mind? Mexico tariffs, Canada tariffs were on, then they were off, now they're coming back on. It's like a daily change, and that just makes things like very, very difficult from a corporate management perspective to be able to do things. It's really bad, but I'm not in that business, but you can certainly see it in some of these prices like Walmart, and it'll be interesting to see if more companies talk about the impact of tariffs on their guidance in the earnings reports this upcoming season. And maybe that means that we get a lot of misses of expectations as well, which will be interesting to see. Yeah, Newsmax is a sideshow. Over to the YouTube from Chi. When would you consider a pullback too deep to be recovered intraday? Comparing today's afternoon pullback to the March 20th afternoon pullback. March 20th. I don't know if my small time frame charts are going to go back that far. No. Was that Friday the 20th? probably not, right? That was the 19th. Let me see on my other calendar here. The 20th was the Thursday. Yeah, so I can't see. The furthest I can go back is this Friday, which I guess is the 21st. So I can't actually see a 5 or a 15-minute chart of March 20th to be able to give you a lot of feedback. But my first thing that I was thinking to say was, what do I consider too deep to be recovered intraday? A lot of that depends on the daily chart. I know you're asking me an intraday question, but a lot of that depends on the daily chart. So what does the daily chart tell me in terms of extension? Gives me a higher or lower probability that we can turn back around. You know, a lot of other people will measure things in terms of percentage retracement, like fib rules and stuff like that. I don't pay attention to fib numbers directly, but I do pay some degree of attention to like the percentage pullback of a move. So it also depends on what type of trading session do you have. Is it a range day? Is it a trend day? Because if it's a range day, and you could go all the way back to lows and then go all the way back to highs. If it's a trend day, then your retracement rules probably matter a lot more. So thanks, Chi. Now, speak of the devil here. We've got new tariff news hitting right now. The USTR preps new tariff option for Trump. U.S. Trade Rep is preparing a new tariff option for Trump. According to people familiar with the discussions, President Trump's economic team is preparing a new tariff option for him in the final hours before his trade policy announcement on April 2nd. In recent days, Trump's team has considered imposing a 20% universal tariff on virtually all imports, as opposed to a reciprocal plan that would impose different tariffs on various countries. However, according to people familiar with the plans, the U.S. Trade Representative's office is preparing a third option, an across-the-board tariff on a subset of nations that would most likely be less than the 20% universal tariff option. That sounds like good news, but this is also my case in point on exactly what I'm talking about. They don't even know internally at the White House what they're announcing at this time tomorrow on what those tariffs look like. So how the hell are we as traders supposed to be prepared, let alone if you are in corporate America and you're an executive at a company that has to deal with import-export with all this uncertainty. I mean, this is just insane. They've been saying April 2nd is the date for tariffs for well over a month now, I think, since the last time they put them on and took them back off. And now here we are 24 hours ahead of time. They've got 3 different potential options on what the tariffs are going to be, and they don't even know what they're going to do. That's why it's impossible to know if tomorrow is a sell the rumor, buy the news event situation, or if it's sell the rumor, sell the news event situation. Because these different options have different outcomes on the economy. But this third option, if they can actually convince the president to do it, sounds like it is less tariffs because it's only on a subset of nations, whatever that means, and would likely be less than the 20% universal tariff option. So that sounds like we already have a new situation here that is better than the worst case potential situation. But I mean, this is just insane. Anyway, back over to the YouTube from Liam. The event is scheduled for 4 p.m. How do you think the impacts of markets? Yeah, that's another thing. How do you think that impacts markets tomorrow, since we won't know until after the close? Do you think there will be more volatility tomorrow or Thursday? So we've had a lot of volatility here every day, intraday, even today, which is a little bit more of a quieter day. I would expect tomorrow to be more similar to today, but who knows what new headlines, like that headline I just read literally just came out 5 minutes ago here. Who knows what actually comes out during the day that moves things or impacts things or pre-releases or whatever. But generally speaking, my thought process for tomorrow is the same as it was today. We're in a more difficult area on the daily chart to do anything new, and we're right in front of a big headline. So what that means is you can look for some day trades to make some cash flow for yourself, but you should be very selective on the ones that you take, and you probably shouldn't do a ton of risk on them. We are primarily in wait and see mode until we can get a bigger picture set up and get bigger picture clarity. Back over to the VTF from Pete. I recall you saying the other day that you used the 8 and 21 EMA for 5 and 15 minute charts, and the 20. I also use the 8 and 21 EMA. I use the 8 and 21 EMA on every time frame, not just the 5 and 15. I use it on every time frame. In addition to that, I sometimes like to refer to a 20 and a 50 and a 200 simple, specifically for the daily chart, maybe for a weekly chart. But for extension, you're still looking at the 8 and 21 EMA on daily charts. Yeah, for extension, I'm looking at the 8 and 21 EMA on any time frame. You can have extension on a 5-minute chart. You can have extension on a 15-minute chart. You can have extension on a daily chart. I'm always measuring that based on where price is versus the equilibrium zone. The equilibrium zone is the space between the 8 and 21 EMA. Further on the question here, when you have 4 down days and then 1 tiny up day, in your mind is that, yes, it resets the clock. It resets the clock. It gives a degree of price and time correction. You have to assess what the velocity of those 4 down days look like, and where the market is currently trading after 1 day of rest, like 1 tiny up day, 1 day of rest. You need to see where that 1 day of rest gets us versus that 8 and 21 EMA. You can do that, just through a simple measurement of how many dollars down are we from that moving average. But it does technically reset the clock. Sometimes you need more than 1 day of correction, though. Sometimes you get that 1 small up day followed by a second bigger up day, or you get that 1 small up day followed by another 2 or 3 sideways days. But regardless, that resets the clock. Example that you like to see, 4th, 5th day, especially if extended. Now it means you need to wait for 3, 4, 5. Yes, exactly. Cool. All right. Almost 5 o'clock in New York. I am going to wrap some things up here because it looks like we got through all the questions in the VTF and the YouTube. Have a great night, everybody. I will see you all tomorrow for another exciting trading day. And if you're in the YouTube, click the thumbs up button, tell your friends, and enjoy your